But I called Big Ridge Gold when I got involved. I think it was 8 cents Canadian. It had like only an $8 million market cap. And I said, they got a million something resource, which their partnership with your company, they're going to be coming out with an additional resource. And I think they can earn up to 80% on that project. They have a 600,000 ounce deposit in Quebec, and the market's only giving it an $8 million market cap.
Peter Grandich shares with us his insights regarding the precious metals, regarding the precious metal mining stocks. He's respected and admired by many. Make sure you watch part 1 of this 2-part series as well.
Let's talk about another risky sector that I know both of us are involved in and have been involved with over the years. What about the junior gold mining sector? When I look at that now, and I'm an old accountant, so I look at financial statements and I look at a lot of different historic metrics, and it appears to be undervalued. But I heard, I think it was Peter Lynch, I think he was the guy from Fidelity, Magellan. I heard him once say, sometimes stocks that appear to be an unbelievable value can even become a greater unbelievable value. Any thoughts on the junior mining sector right now?
So Ron, we were having such a good interview. I don't know why you had to bring up something that I absolutely got killed in last year.
Me too. I'm with you.
But for your viewers, and I'm glad that you admitted, very few people that talk about investments ever bring up the fact that they lose. Sometimes I'd be at a show and I talk my loss, and every person that went up there, I said, I should be just sitting in the audience and listening to these guys. But there's 2 rules now that I have to live with, especially after what happened to me last year. The first has always been a rule of mine, and that is, in the junior resource market, failure is the norm. And what I mean by that is, it doesn't mean that for every 10 companies, they purposely did something wrong, they cheated people. No, they honestly went out, they thought there was going to be something there. They might even had indications in their stock rose, but at the end of the day, they don't find the mine, develop it, or sell it. So failure is the norm. If you just buy and hold forever, 8 out of 10 aren't going to work out. The second one, which I didn't list to, and it cost me dearly, and I used to tell other people this, you have to be mentally and financially prepared to lose part of all your capital. And they don't like that all the capital part, okay? Mm-hmm. But that's how risky it is. But if you pass that, just like hopefully when you've gone to a casino, if you took a certain amount of money, if you lost it, you left, okay, I had a good day, whatever, and that was that. That's how you have to treat this market. But if you do treat it that way and you pass that test, it has unbelievable upside opportunity that you're not going to find in general stocks. Listen, you can do real well. If your stock doubled, it used to be in the market over 3 or 4 years, you were happy. In the junior resource market, it's not uncommon, the ones that work, where it's 10 or 20 or 30 times or more, it's gone up from what it once was priced at. I think if you approach it in that regard, you should look at it. Now, in terms of what you asked about, in my 39 years, a lot of those years around that industry, I don't believe they've ever been cheaper versus what the current metal price is. Because when gold was $350, it was a lot different than when it's gold at $1850. So compared to the metal or metals that they're looking for, it's cheap, or the cheapest it's ever been. And just as a group, I mean, it's just, I can't imagine it being any cheaper at any other period, certainly in my 39 years. The challenges now for a junior resource company has changed a lot, Ron, in the last 10 or 20 years. 10 or 20 years ago, there were hundreds, if not thousands, of what we once called stockbrokers, then became financial advisors. But they would build a book of business around holdings, and in particular in the junior resource market. And so if the resource company got he or she interested, they also got their 200, 300, 400 clients to buy it. That's gone. There's really you'd be a dinosaur if you're still somehow a financial advisor and handling people's individual stocks, because they can buy it for nothing through a discount broker. Why pay you $300 to buy that when I can get it for nothing? That was a big damage to junior resource companies to get people interested in their stock. The second thing that happened is it's become overregulated. They won't let them say anything, just almost nothing. And a junior goes, listen, I don't have stake. I just have sizzle, which we're hoping to turn into stake. Sorry, no sizzle. So it's been harder. And then third, the overregulation to where in the United States now, because a lot of these juniors, if they're not based in Canada, they trade on one of the Canadian exchanges. You can't even get an unsolicited order on a junior. So the juniors had to resort to, and of course, COVID mandatory made it, they had to start using social media, digital media, whatever you want to call it, and hope people can learn about them through these different avenues and so forth and so on. The problem there is it was one thing when that broker who had a really decent understanding, because that's why they specialized in mining, versus either some IR guy that they fired, some IR firm, or a person that's doing this, but they do a lot of things. They don't have any in depth. They don't come across to the end user as, hey, I really should listen to this person. They kind of know what they're talking about. So I want to tell you that, because when people go on, why aren't the juniors going? That's a key reason. It's much more challenging for them to enhance that. So also now what we're going to see, because of you and I saw last year how bad the market was, a lot of juniors are caught short in capital right now. And if there isn't a sudden big kick up in it, it's going to be difficult for them to finance without great dilution. So the first thing I think we're going to see this year, Ron, is a great pickup in mergers on necessity. But the majors, thank God for this, they would always come to this point and be heavily indebted, taking on too many projects. They are in great shape. They have great cash flow. They're not heavily indebted. So I expect the junior resource market will see first that merger out of necessity, and then we're going to see the majors acting. But there's one other big thing, Ron, if you don't mind me sharing this, and it's really critical. You and I could have took a globe at your somewhere's back there in your beautiful basement, spin it, put our finger on some country and go, yeah, we can go there. We can mine there. It's not the case anymore. It's become very difficult for mining in several areas of the country. We just saw in Panama a known mine, and they told the company no more 2% royalty. Give us 20% or leave. We're witnessing in certain areas of the world now where social and political and economic unrest is stopping the miners from going. So when you think about it, you got to spend $500 million or $1 billion to really build any sizable mine. Miners have to be really careful at a time when for years it's been under invested in. And this electrification argument where we need all sorts of different minerals, let alone rare minerals, it's not readily available. And the mining companies are only going to have limited areas or stay focused that way. So I think as that becomes apparent, if you have a quality, even a junior, and they're sufficiently funded and they got a project that's past grassroots, I think as the year goes on, we'll see more people paying attention to them. And I said that with my fingers and toes crossed, Ron.
I'll cross my fingers and toes as well. So that's a good segue into two companies, one of which I believe you said is a blog sponsor of yours, Big Ridge Gold. They're in Newfoundland. They have a Hope Brook project, and a company that sponsors my channel, First Mining Gold, who has a couple large 5 million ounce development projects, one in Quebec, one in Ontario. But they're also partnered, coincidentally, with Big Ridge on the Hope Brook project. So as I kind of absorb all the knowledge you just imparted, and I think about those two companies, and I guess those three projects, Hope Brook, Du Parquet, and Springpole. Hope Brook's in Newfoundland, Du Parquet's in Quebec, and Springpole's in Ontario. They're all in Canada. They all have exploration potential. However, there's been resources that have been defined already on those projects. I also, and I don't know how much you've heard about this, but I just saw an article in Northern Miner magazine, and a couple of my viewers have been feeding me information. It appears the government of Canada is recognized that, hey, we need to make the permitting process a little more expeditious. So when you look at let's just say companies like Big Ridge or First Mining, and I know we're not going to dive deep into the details of it, but from a big picture, they're risky, right? But is a bit of the risk mitigated because of where they're geographically located, and because they aren't a pure exploration play? They have these big assets in place.
We'd like to thank our sponsor, First Mining Gold. They're a Canadian gold developer with 2 world-class projects in Canada. They also have a handful of other projects. When you total up all the gold in their resources, it comes to over 12 million ounces. They're worth checking out. I'll put a link to the company's website in the description below.
You bring up a good point. Today, I would certainly want to invest in Quebec, Ontario, or Newfoundland before I would want Panama and a couple other places which have turned very negative against mining. So that's
Mexico. I'm sorry to interrupt you, but you've been in this business a long time. Mexico was a premier place to build a mine 20 years ago, and that's changed. And I apologize, I interrupted you.
That's no problem. It's changed in certain areas, but I still think there's a couple of places that you can go. And I'm actually looking at being involved with a silver play down there because I don't have really any exposure to silver. But let me answer your question, because it was a very good one, as all of them been so far. The Big Ridge story, when I got involved and they became a blog sponsor, and coming a blog sponsor doesn't mean I'm going to say just nice things about them. They have that understanding. There's no stock options. There's no hidden things. In a sense, they're helping me not have to be a subscription-based thing so everybody can see it. And that's what they also obviously want to have exposure. Okay, there's no doubt about that. But I called Big Ridge Gold when I got involved. I think it was 8 cents Canadian. It had like only an $8 million market cap. And I said, they got $1 million something resource, which their partnership with your company, they're going to be coming out with an additional resource. And I think they can earn up to 80% on that project. They have a 600,000 ounce deposit in Quebec, and the market's only giving it an $8 million market cap. I called it the poster child for how bad the junior resource market had become. Okay. Now they came out and they bumped up the resource nicely. I think it's the second biggest resource now in Newfoundland. And there's a lot of good chances of going forward. But you also brought up another good point. Certain of these provinces, Quebec is one and all, is starting to throw some serious money to support mining, because they realize some of those minerals they're going to need for their power plants and all the other things that they want to do, and so forth and so on. I know Quebec has become that way. I think there's going to be a tremendous amount of mergers and acquisitions in Quebec. There's too many dynamite projects, and they're starting to sniff, and there's a few making moves and all. But going to what you said, there are certain provinces that are outstanding, but mostly in Canada, you don't have to worry. In the United States, there's a few states, I know one guy that's hoping to get a permit in California. I wish him luck, but I don't see them, I just don't see that state. I wish it would succeed, actually, and become its own country, because they act like they're their own country. But where you're going to be has never been more critical now in all phases, mining and exploration.
Yeah. With First Mining, when I look at it, I want to also mention from my perspective, First Mining Gold does sponsor my channel. However, for years prior, I've owned the stock and actually made videos about the company for years before I agreed to have them as my sponsor on my channel. to me, that's important, that if I'm going to talk about a company, it's something, you know, I'm going to eat my own cooking. I may be talking my own book, but I'd owned the stock for years, and what to me is a significant stake in the company. And gosh, it's hard to, and you talked about this with Big Ridge, because I follow them closely as well. These Canadian developers, it can get worse, right? But it's hard to imagine a better value proposition. But you know, as you and I both know, I would have said that same thing a year ago.
Yeah, well, but you know what, Ron? It
Yeah.
is, last year was a very bad year. The lower you went down the food chain, the worse the losses were.
Yeah.
And some have been so bad and been driven down in such a low price and already have a very large amount of shares. There's going to have to be alternatives. But one of the other things that I think would be good, and a gentleman that I interviewed yesterday, I have a lot of respect for, Michael Gentili, made a good point. He says if there's 1,000 juniors with 1,000 mining projects, probably out of that 1,000, there's 300 good mining teams. Let's hope there's a merger and it gets down to only 300 mining deals with 300 good mining people.
Right.
Not everybody in the mining and exploration business would I want to have anything to do with. And it cost me a lot of money to learn that. But please don't let that small percentage of people stop you from, and people have that. And here's the negative about the internet. This is another important thing because it plays into the junior. I'll take example, uranium. You can go on the internet now, and there's certain groups that talk about uranium all day, posting everything you can. So in the days it went up, they use a rocket ship going up. The days it went down, they make fun of, people getting beaten up and all that type of stuff. One of the things that's happened by Twitter and all is people hear it so much, so often, it kind of shrunk their opportunity time to allow that company to develop and work. So their disappointment becomes much faster, and no company, not even IBM and all, to have news every day, let alone a junior. And so one of the things that I would caution people is, if you are going to be in the junior resource market, please don't watch it intraday or even daily. Go back to the old day when the only way you knew what the price was is if you called your broker or you saw it in the newspaper the next day. Once a day is enough to look at it.
Yeah. No, I agree. That's when people ask me, it takes patience, because as we've covered during our conversation, I think the long-term thesis for precious metals, even the base metals, is obviously there. I feel comfortable owning some junior mining stocks where I feel like I know the management, and I feel like long-term there could be some value harvested, but it's going to be long-term. Now, I fully admit I check every day, but I know in my mind, like, this is not by the end of next week, it could be up, but this could take obviously years to come to fruition.
Well, I just think, if I may suggest one thing about your situation, you should let people know that your wife isn't keeping you in the basement because you own junior resource stocks. Because I was in the doghouse, trust me. So, and a basement is a lot nicer than the doghouse.
Yeah, well, the reason I'm in the basement is I actually lived here briefly before we got married, and I had decorated the house to my liking, which included an air mattress in the family room that I slept on. And when she moved in, Peter, she slowly took over the house, decorating room by room. And I finally put my foot down and I said, any room with a concrete floor, that includes the garage and the basement, I get to decorate however I like.
Great for that.
Yeah. Hey, thank you. Did we miss anything? Any other points you want to make to my audience? I really appreciate you. You've been super generous with your time and with your knowledge, and on my behalf and the behalf of my viewers, you've imparted a lot of great information and provided us with some good laughs too, Peter. Thank you.
Yeah, well, Ron, last year was, and into the early part of this year was the worst period of my life. Financially, struggles with health. And in this turnaround or coming out, I felt my creator, and hopefully a lot of other people believe it's the same creator, says, listen, I've given you all this knowledge. It's a really rough time out there. Don't worry about sustaining yourself. I'll keep you paying your bills. You're not going to get rich, but I'll pay your bills. But spend as much time as you can sharing that knowledge. So I have no issues speaking to you as I did. I'm as happy that you gave me the opportunity as you think I gave you.
No, it's been great. And it's interesting you say that because, you know, I started my YouTube channel about silver and gold, and that's always my main goal, right, is to connect with people and give them some value and give them some camaraderie sometimes as well, you know, because it is tough. And my channel's not just specifically focused on the mining sector, but last year was tough. It was a very, you know, I'm not diversified. I know, you know, I have a pretty good financial background. I knew the risk I was taking. And, you know, you always kind of think a worst case scenario. And last year was kind of a worst case scenario. And it made me, I guess maybe in some ways grow and realize that, you know, I don't think I'd ever had to actually, from a financial perspective, have to go through what I thought the worst case scenario would be. It had never really happened. And last year, in some areas it happened. And yeah, you live and you learn. And luckily, you know, I actually made some really great friends through the channel. And I feel like, you know, even camaraderie with you now that, you know, we aren't alone and we can help each other.
Well, the next time you have me on, if you have, you'll tell me the story about the bears.
Okay, I will, Peter. Thank you.
Thank you very
really
much.
appreciate it. You have a great weekend. Okay.
You too. God bless. Thank you, Ron.
Thanks, Peter.